This video I will be showing you how to get your MT5 account, or your MT5 account is the account you use to interact with the trading platform. This is where you place your trades, this is where you take signals, etc. So the first thing you'll be doing is you head over to your Play Store. For those using Android phones, for those using iPhones or the iOS ecosystem, it's your Apple Store. Then just head over and search for MT5 MetaTrader 5 app, and you would search out this particular icon. Then once you've just gotten it there, you install. Once it's done and it's been installed successfully, you're going to see this. So you simply click on it. Once you click on it, I'll guide you through the process. So once you launch the app, it will automatically give you these. You simply tap on accept. Then the first request would be to open a demo account. Now, a demo account is a virtual account where you use virtual demo money. It's not real funds, but you can use it to practice. Simply open an account. Now they would ask for these for you to fill out these boxes. So you fill the details: your first name, your second name, your date of birth, and then your phone number, and then your email, and I think you're good to go. Then you always select use hedge in trading, right? Use hedge in trading. Then the server is a meta demo. Leverage, I would say leverage, just go for leverage 1:500. I prefer 1:500. Then deposits. For this deposit, they will give you virtual funds, so you can either select. Some people can start with 3,000, others might decide to start, they want to start with 100,000, but by default demo accounts start with 10,000 US dollars. So after that, all you need to do is click on accept, and once you filled out the necessary details here, you can simply register. Now you've registered, they generate the login, the password, the investor, whatever. Now this is your demo account. This will be used for you to take signals, for you to practice, for you to sharpen your skills. A lot of people may decide to fund their account subsequently with their own funds. That's okay, but we will starting with the demo account so you can master the markets. After that, you click on done, and now it's been created. The difference between a real account and a virtual account is you cannot withdraw the funds from a virtual account. It's only for you to practice. They're not giving you the money. It's just for you to practice. So that's your quotes. In your quotes, this is where you always have your currency pairs. Now you have all the scopes, meaning you can simply tap on it. Once you tap on it, you see all these options, and then you can either place an order, place a chart, properties, depth of the market, market statistics, simple view mode. The two major important options here are either new order or chart. I just tap on the chart, and it takes me to the chart of that current, pair I picked. So quotes, if I want to check what's happening in AUD USD, I tap on it and I head over to the chart, and it shows me what is happening. If I want to check out on what's happening on GBP USD, I also tap on the chart. And the chart, you have these options on your top right corner. This is to help you just to know the current price point. Where is the market going now? As you can see, this right here, anytime I move it at your top right corner, you see these digits. Anywhere I move this is what you call the current price, or the price where anywhere this line goes is where you see the price. Now all these things here, all these numbers here, they are giving you the current price at the moment and future prices it may rise to. So for example, this is Great British versus the US dollar, and what that simply means right now is at this current price here that is moving right here, 1 GBP or 1 pound is equivalent to $1.28 right here. That's simply what it's trying to tell you. This line right here, you can see the green line that is moving as the market is fluctuating. It's simply telling you that as of today, this very minute, 1 pound is equivalent to $1.2824 or something of that sort. And now all these little movements up and down that you can see, they are called peep movements. We'll talk more about that in the class, not in this video, but that's what I want you to know. So when you're making your analysis, everything is just in correlation to what you need to know. So over here, this is for indicators. Indicators help you know different things about the markets, the potential direction of the market, volume. We're not going to talk about that in this video too, but the main thing now is we head over to time frame. So you simply head over to time frame zones to see what the market is doing per day, per week, per month, per hour, or in like this now. And also, I should say this so you don't get confused. For those who are asking lines require all these lines you're seeing, all these candlesticks you're seeing, they represent money and they represent volume being pushed into the market. So whenever you head over to your time frame, for example, this is the day. Each candlestick represents a day on the daily time frame. So every candlestick you're seeing, this is 1 day, day 2, 3, 4, up until this point, it all takes a day. It takes an entire day to form one candlestick on the daily time frame. So when you zoom in, like a 4-hour time frame, every candlestick you see takes 4 hours to form. Then on the 1 hour time frame, every candlestick you're seeing right here takes an hour for it to form. On the 30 minutes, same thing. Every candlestick represents 30 minutes. On the 15 minutes, same thing. Onto all through the 1 minute, every single candlestick represents a minute. So this is 1, 2, 3, 4, 5, 6, 7, like minutes. So that's basically how it works. Then over here, this is the part I kind of like. This is where you have your sell limit or your buy limit. Now, when taking signals or when you want to place a trade, waiting for the market to have a retracement to trigger your entry points. In simple terms, this is what I'm trying to say. Let's say, for example, we're using a 15-minute time frame. We're expecting the market to come down here before continuing its upward movement to the upside, right? What I simply do is I head over here, I put my buy limit here, I put my take profit here, and I put my stop loss here. Now, let me quickly explain what these terminologies mean. The buy limit simply is telling the market that, look, right now, I am not going to enter the market. I don't want to place a buy or a sell, or in this case, I want to buy, right? So what you're trying to tell the market is, I will buy when the price comes back. I will buy, let's say, the British pound when the price comes back to $1.28, right? But right now it's currently higher. I don't want to buy at this price, so I want the market to come down here and trigger my entry. Now, once it's triggered my entry, I will officially start trading. But however, I'm putting my take profit here. Now, what that simply means is once I've made this profit right here, once the market, this candlestick has, triggered this entry right here, and then it crosses over this point right here, the market will automatically take my profits. Same thing here. Once I place this right now at this particular point right here, and I leave the market to do whatever it's doing, the market will not trade for me until this price is triggered. Once the price is triggered, then I'm in the market. If not, nothing like that's got to happen. At the same time, the stop loss is to ensure that you are not losing all your funds. Just because you have the funds or you start to trade doesn't mean you cannot cut your losses. The markets can be very volatile a couple of, at times. So what stop losses help you to do is that they help you save your capital. So in an instance where the market decides to start going down as against going up, you're telling the market that, look, if it goes down below this angle right here, take me out. I don't want to trade anymore. Cut my losses for me. I've lost $2. And the great thing is you can see how much you are actually going to lose right here. So your SL stop loss is going to be like let's say $1.95. And if it's going well according to your analysis, you're going to be making let's say $3.59. So you're simply saying, look, I don't want to lose more than $1.9 on this trade. And even if the market grants me up to this point here, $5, I don't want to make more than $3.58. Then after you've done that, you simply press this over here, and then you place. So that's basically how it works. This is the entire purpose of this. So this is also to help you take things like signals, which will be taught subsequently. The next option, which is this option right here, it's called one-click trading. Now you see the sell by this side, and then you have the buy by this side. It gives you instant execution. Now, let's say you see the market is already having an upward trajectory and you want to enter that trade now. You don't want to wait for a retracement. You simply click on the buy. Now, if this is your first time doing it, it will always ask you this, and then you accept to the terms and conditions, right? So you click OK. Now you simply put buy. Now, why this is also really cool is because you can buy as many times as you need to buy, right? So you can, let's say, for example, I want to buy like 5 times. I can immediately buy all of them at once. So it helps with instant execution. What if the market was having a sell? I can instantly put that too. Now, that's basically the summary of everything you're seeing here from this point up until this point. The more you use it, the more you become conversant with the markets, the more you'll understand what I mean. So don't stress. We've talked about the quotes, we've talked about the charts, and now let's head over to trading. This is where you can see what is actually happening with your money. This is also where you see how the prices are fluctuating. This is also where you can add a request, or you can also add an order here. But that's most likely you do it in somewhere like this. But just so we make sure we're covering everything. Now over here you get to see how much is being lost or made in the market. Now I should also say this: whenever it's red, it simply means you're on a loss, right? Currently it's in a loss of like $3 or something of that sort. Whenever everything turns blue, meaning it's actually positive, you can see minus right here. I should probably say this too. just for the purpose so you understand. Anywhere you see the reds going down, it simply represents bearish. Bearish means the price of a commodity or a pair is going down. And anywhere you see the greens, they call it bullish. So simple terms, let me easily put this right here. Simple terms, this is bearish, going down. Provided it's going down, we call it bearish. Once it starts going up, or there's an uptrend, we call the market bullish. So it creates lower lows, it tries going down and lower, then it's bearish. When it creates higher highs, it's bullish. History. The history shows you all the things from your profits, your deposits, your swap, your commission, and your balance. Now, everything you make from, if you make losses and you close all the losses here, it's going to reflect here. If you fund your account, it's going to reflect here. If you trade, make profits, all of them, they're going to reflect on the history. Now, in the history, you can check maybe all the symbols you've traded, or you head over to the symbol, the profit, the losses, or you head over to the dates. This helps you to check all your previous records, and as we can see here, for the last 3 months it's $100,000 because this account it was just created today. Now this messages, it's not really important, you have nothing to worry about. Back to the quotes. Yes, I should say this before I probably forget. On the quotes option, this is what you're supposed to do. You see this plus button right here. Now this plus button is for you to add quotes or find symbols. So for example, let's say there's a signal on USD JPY. You simply press USD JPY, that is the US dollar versus the Japanese yen, and once you've gotten it, you simply press on it, right? You add it right here. Okay, I think this has been added. So let's say you're looking for gold, XAU USD, that is gold versus the US dollar. You simply add it here. You have indexes, you have metals, and you have NASDAQ. I only trade Forex metals. Metals include gold, and then gold, silver, mostly gold and silver. Then there's the NASDAQ. Really, I don't trade NASDAQ. There's also Bitcoin in the normal currency pairs, but it's not here too because this is a demo account. Then in the derivative synthetics, that's an entirely different world of its own, so I'm not going to cover that in this video, but these are the essentials. So once you've looked for the pair and you've searched the pairs, all of them will appear here once you've found them out. Well, let's say you want to delete some pairs. You no longer want all this. For example, you only want to trade 3 major pairs. Let's say Euro USD, XAU USD, and GBP USD. So you want to delete the rest of all these other pairs that you don't need. You simply head over to this button right here. You go to this place, this delete button, and you click on delete. Then you simply just select all the other pairs you're not interested in, and then you delete them. So once they've been deleted, you are good to go. And now you only have 3 pairs. Same if you want to add, the pairs back or look for any pairs, you simply head over to the Forex symbols and search out your pairs till you find them. You'll also be good to go. Quick recap: the quotes, this is where you find your currency pairs to trade. The chart, this is where you begin to trade the currency pairs you found. Your trades, this is where you check out the pairs you are trading, right, and how they are making progress. In an instance where you want to take profit or you want to cut your loss manually, you don't want it to wait before it hits the stop loss or reach your take profit, you can easily do that. How do you do that? You simply tap on the currency pair you want, you tap and click for a while, right? You don't just tap, you tap and click for a while. Then these options pop up. You can close your position, you can modify your position, or you can put a new order. All right, so you tap on it for a while and then you can close position. Now it will ask you, do you want to close with a loss or close with a profit? If you say you close with a loss, right, and accept, then it shows done. You head over to your trade history. It will show right here you closed with minus $1.92, right? So that's basically how you can close an account manually. Or let's say you want to close all the positions at once. You tap on this 3 right here, and then you can see close all positions or close losing positions. This is to help you easily close an account, or in case you want to take profit or cut losses early, depending on what the market is showing you. So let's see, bulk operations can also happen, right? So that's something you get used to as you become more frequent with the market. Then your history shows you, like we've seen here, shows you everything that's happening. Okay, so we've come to the end of this session. In the next video, probably I'll be showing you how to open a live account and how to take signals using that live account, and how to link your broker to your live account, to your MT5. Your broker to your MT5 is very important.